Boom. We are live, ladies and gentlemen. This is Tio and the Arcane Bear. As you can tell, even though it's bright outside, the light behind me is green, and we are still in a bull market. We just bounced beautifully off the previous support and resistance lines of the buying climax in the trading range we were back in January. Now, to kind of go over a few things today I'm quite excited about. Here's Bitcoin on the 1 hour. That's a little bit of a short time frame there, ladies and gentlemen. There we go. There's a 4 hour, something a little bit more manageable for what we're trying to do, which is take a look into the macro perspective. And although it's always good to use the minutia, especially to scare people, it says clearly candles look much worse when you watch the 1 minute. What's nice about starting off on these larger time frames, aside from it's healthy, you can tell how high up we are compared to where we started this accumulation area way back here in March when the pandemic officially started. I'd like to congratulate everyone too for having made it through the pandemic for the most part. I think we're pretty much done. I'm short COVID, by the way. I've gone short COVID-19. I believe the pandemic's pretty much done, which is fantastic. Can move on with our lives and ivermectin and whatnot. But more importantly, what we're interested in here is asset growth, wealth management, and portfolio interest, specifically in the venture capital sector. And for a long time, Bitcoin was very much so a venture capital play, very asymmetric. Now we're getting into a little bit of the reliability as some of the world's largest companies have entered into this space. Now, we bounced right off our resistance into this nice shakeout. We saw a lot of supply come into the market. Again, what we can generally take a nice look at is with this area chart here, we can see we saw a dip of around 25%, but just previously in the trading range prior, we saw a dip of around 27 to 30%. So this range is shallower than the previous, and that's nice. Now with Ethereum, it was not shallower, but it still did dip right into what is now likely our primary shakeout with some secondary tests on the way. But what I guess is going to happen here, and I think there's a larger macro perspective story that's important, is remembering where we are in the trading range. So way back here, feels like years ago, January 2021, or the 6th of January 2021, this primary buying climax or shakeout or automatic rally, our secondary test, our spring, our break above the creek, and boom, the first explosion into the top of a new trading range. Here now, as we enter this new trading range, the backup trading range, I believe, to this primary trading range, especially because it is now a few percent shorter, which is fantastic. The next areas we're going to look for is likely an automatic rally, which we do not have yet. So back here, we saw our primary automatic rally into the heavy line of resistance. We did break out, and we can kind of look at that today too, but I believe we broke out just against the first downward trend, not the entirety of the trading range. So I still am expecting an automatic rally to come up somewhere like this. We can even maybe take a closer look here by using some of our momentum indicators. It's a few different ways to do this, but more importantly, we hit support, which was our previous resistance, is now our new support. It's quite a common feature. And here I believe the automatic rally we're looking for is going to be, it could be even a little lower here. We could see it only go to around 53. And as we go closer, we can definitely see we are above our point of control, which is a very extremely important area. And then here, this secondary area of resistance at around 51,000. Now, I actually suspect that we are going to get a slight dip potentially here into a shakeout or a spring that could go as low as 39,000. Now, I wanted to go over why I think that is. And in the midst of doing that, brought me across a number of things. So for those of you that don't follow Michael J. Burry, I suggest it. His conversation about inflation is very interesting right now. A nice call option volume, multi-decade high puts call ratio and bull market lows in as shorts capitulate. We'll go over that briefly, but on a secondary format here, if you notice here on Twitter, I don't actually follow anyone. So what I've done now is created a list that you guys can follow of the people that I like the most. You have Michael J. Burry, Kathy Wood, Ark Invest, Naval. Yeah, you've got CryptoLark in there. A few others of my favorites. Very few, though. I wanted to clean things up a little bit. But the importance of this story, I think, is the importance of inflation and deflationary technology. Inherently, Bitcoin is an extremely deflationary technology, and the wind that it might take out of the sails of the banks is absolutely magnificent. Just money alone, wire transfers, etc., is a multi-trillion-dollar space, if not like almost all the trillions, depending on how you look at assets and characteristics of value, especially the interpretation of value, cultural memetics. Anyways, that's a longer story. The point of this is, what I think we're witnessing right now is some of the last parts of the conversation here we see before. Well, first off, there's been like 1.9 trillion more dollars added to the Fed balance sheet in the M1 supply. So that's probably a pretty big deal. And what we're going to get is a lot more volatility here. So generally, one of the things we like to do is keep an eye on the S&P 500, which has recovered very quickly today, back inside the box. Now, I'm actually starting to believe, instead of a downward dip to the bottom, and this is why we always follow the market daily, is because things change daily, is that what we're actually witnessing is a primary support here with our primary support, and our buying climax was here. So this is likely a new trading range that we're going to see for the S&P 500 as well, which would be pretty monstrous. If we see positive volume coming out of here, which seems very likely due to the nature of the story of inflation, that will just continue to push the stock market to new all-time highs. The VIX today also, interestingly enough, I think is reflecting my feelings of this weekend. I met some beautiful women on the beach the other day that I've never met before, and we hugged and kissed, because it's the standard thing to do is kiss each other's cheek in Central America, and there was no second thoughts. So that I think signals part of our general consciousness leaving the idea of a pandemic to some degree or another, and the market instantly turned around on the VIX around 15 to 16% back towards the primary falling trading range here again, which is quite nice. I don't think we're going to get a spike above the trading range here. I do believe that this is a breakout for the VIX and back into nominal areas, back below 16 effectively. For multiple years, we were running below those levels. Only in 2008, 2016, 2018 did we have these spikes higher, and even still they were extremely short-lived. You're talking about weeks in comparison to what the pandemic has done with this massive spike that we saw here. I'm pretty sure it's the highest spike on the VIX since well above 2008. Oh, wow, no, not above 2008. Actually, almost equivalent. Interesting. Would have not suspected that the pandemic and the crash of 2008 had any similarities and the 2008 one seemed to last almost longer. People are scared about the wrong things, I think. That's a very clear indicator there, that's for sure. Well, or I guess this human nature is to focus on greed and fear, right, ladies and gentlemen? Okay, so back to our primary driver in the story here. If we're seeing the growth of deflationary technology move at such a ridiculous pace, and through the financial sector itself, massively reducing the cost of entry and what it takes to play this game, we're going to be witnessing basically a battle against the money printing, inflation, and the deflationary nature of technology at scale? That's a very interesting question, and I do not know the answers to it. But on the short term here, the conversation that we're seeing in some of these bigger marketplaces, I think, is going to do something like this, where we have a shakeout just below, probably near. Again, now we're into those March 11th days, like the March 15th area. So we're kind of right smack dab in the center of the March date I've been talking about for our literal spring. Now, I don't know why this is important. I'm only so old. I guess for relevance, we could look up something called the Machu Picchu trade. I guess we're kind of just going on a rant today, ladies and gentlemen. We thank you for joining us on today's episode. This is Tia with the Arcane Bear. Please give us that like if you're enjoying the content. We're currently looking up, yes, the Machu Picchu trade. Oh no, not these. It's a Machu Picchu trade. I should probably organize this stuff before I try talking about it, but often I don't know what I'm going to talk about. I just kind of jump on. We're going to have to find this for another episode. Anyways, if you happen to do the homework, Machu Picchu trade is, I believe, a September 22nd date, which would represent not the equinox, but the vernal, or just before the equinox, September, October, December, yeah, something like September 20th. Anyways, take a look at the Machu Picchu trade. It's effectively the opposite of our springtime, from what I can tell. It's the fall. Anyways, point of this being, there seems to be a literal translation between the springtime and the fall time itself as well. I don't know why. Something to do with cold and vitamin D, I'm sure. Layman's terms, at least. With that in mind, as we get into this spring, this final idea that the pandemic is kind of finishing, a lot of countries are returning to normal, aside from the United States, Canada, anywhere that has a first world country because they're too controlled by governments. Everywhere else is pretty much back to normal. It's back to normal down here. We have no driving restrictions anymore. Everything's going great. Very excited about that. This spring that comes in, that onrush of parties, because I definitely want to go dancing with a bunch of people again here soon. I guess more traveling, more consumer spending, the velocity of money hitting the ecosystem is kind of pent up right now. A lot of people who normally like to go out and spend money doing stuff have been doing very little in comparison with what they normally do. And we can expect that there's going to be a fair amount of velocity coming to the ecosystem around this March springtime. Made this conjecture for a while. Again, I don't actually have any solid proof to it other than we literally call time spring and fall, and the pandemic started exactly on the springtime. Anyways, I don't know. The consciousness of the reality, I think, is much weirder than we give it credit for. We could chalk it up to coincidence. Universe is great at that. Okay, so we have this spring that I'm quite interested in, and I believe this is going to be the finalization of our trading range before we go much fucking higher. I thought we would go lower. I didn't in no way suspected we would be this high. 30,000, maybe 50,000, not yet, but I did think 100,000 by August, so I don't, how else would we get there, right? But that puts us currently between the buying climax and the end of the springtime, around 40 days before we'll leave the box again. So you got 43 days, ladies and gentlemen. This train is basically docked in this station for the next 30 days, approximately. Let's see, from primary support to the finalization and exit of the trading range. On the previous, you had 37 days. Let's just roughly estimate that from the primary support. We go out 37 days just for fun, and that puts us on March 18th, March 19th. So somewhere around the middle of March. That's been my general assertion for quite some time now. Even though the price is a lot higher than I thought that we would be at this particular date, we're right in the perfect spot for the next step. And I believe we're going much, much higher in Bitcoin. I believe we're going into the hundreds of thousands of dollars. Very briefly, most likely. It won't stay up that high that long. There's just no buying pressure up at that high to keep that price, and it will fall dramatically. And we've seen what that looks like in other ecosystems. Ethereum. Again, yesterday I stated my worry. I want to remember, guys, like, I'm not trying to make FUD or something like this, just trying to share my feelings about things, and that sometimes sounds like there might be fear. Well, because we're human. That's the point of understanding that what we're doing is analyzing human emotion in the market, not necessarily the market itself, more so how humans react. Us, how we react. I'm not a human or something. How we react to the psychological pressures of euphoria and fear in the world that exists around us, and the ever-changing environment that we live in, and the cultures that live in those environments. So that gives us this dramatic sweep down here into the shakeout at around 35% for Ethereum, when the previous buying climax shakeout was only 26%. Now, if we take Bitcoin as the standard, which I think is a great title, then what's interesting here for us now is that Ethereum has showed significant weakness compared to the previous buying climax. This is not a great sign. It definitely shows a weakening in the market, which it had not seen yet up to this point. Now, these are significant trading ranges, and we did bounce right off the resistance and support. So there is nothing out of place here. We're now above that falling range support, and even more clearly, we stayed pretty much right at the top of the buying climax of the previous trading range here, and here we are in our shakeout here. So this looks good, but it definitely looks weaker than I would have liked. I would have liked, as Bitcoin had made a higher low than the buying climax itself. Here you have your buying climax currently at 42,000, and the primary shakeout only went to 44,000. So that could mean we actually see a much deeper spring for Ethereum if we were to get that same type of springtime volatility, somewhere maybe as low as $12,073. $1,273, Tio. Let's keep adding zeros. Maybe Ethereum will go to $12,000. We've made assertions that it could go that high. I'm just less confident about what it does over the next 10 years. With that in mind, we see a very nice quick rebound of Link, very similar qualities to this particular trading range as well. We see a much deeper price move down than we saw in the previous trading range. So this could be classified as a change of character. We just have not seen it in its entirety yet. We do know that Link is mostly full of retail investors who are starting to have institutional investors show up here, as you can see very categorically by looking at, there's a bunch of things to look at. Look, ARK Invest, Citibank, who else is here? Grayscale Investments, there we go. Yes, I read stuff, ladies and gentlemen. Here, you can see a list. Oh, and look, there's Chainlink, but there's also Compound, Cosmos, Decentraland, EOS. The Grayscale is all currently looking at offering as a digital currency asset manager, and Flow by Dapper Labs too, for all the NFT lovers out there. So what does this mean? Well, this means that the bigger money is moving into this sector, and they know how to buy and sell and shake weak hands out. And currently, Chainlink is made up of mostly retail investors, and more so the institutional investor who's very good at shaking out the retail investor. They've done it for a long time because they have deeper pockets than you do. I do not suggest you trade margin for butter. Should always eat butter instead of margin. And you probably shouldn't trade leverage if you are new to trading. You should be buying spot, because then you can, at least at the very least, just try to control your goddamn emotions through this whole roller coaster of a ride without getting liquidated, which is an impossibility if you are buying spot. But if you're buying leverage, it is very easy to get shaken out of positions here. Do not listen to YouTubers telling you to trade leverage. I mean, trade leverage if you want to play around. If you're good at it, you know what to do. Yeah, it's like going to the gym. Leverage is a powerful thing to use. It's like basically like going to the bank and borrowing money based off particular terms. It can work out fantastically if you are good at using it. But if you are new to this ecosystem, which I'm sure a large number of you are, do not trade margin or leverage. At least wait till you're like 5 or 10 years old in your trading and investment thesis to even begin to want to hit some home runs. But if you want to go, let's say, try to defend your capital with the leverage trade, small amounts is always a good way to go, because there's never any harm to learning anything. Just don't let that cost of learning cost you more than it should, which is probably like just a few $100 at the most. Anyways, next thing, Chainlink looking good here. Again, I think as long as we stay above the point of control here, not a big fan of the fact that all of these are showing significant weakness over top of the previous trading range, which is not a great sign. It does make me think we're going to have a little bit of a deeper correction for a spring to try to really shake out the last of the weak hands in multiple assets here. Just like with Avalanche, I doubled down at around $44 and I'm sitting on a big pull loss here, at least in terms of the second position. Now, I'm not worried about it because I'm thinking long term. Too many times it's easy to get caught in thinking short term, get scared, and then not pull the trigger when you should have pulled the trigger, and then pull the trigger when it's too fucking late to begin with, and then pull the trigger anyways, because that's kind of what happens in the nature of human consciousness. Gave you the opportunity to pull the trigger way back here, and I doubled down here. So if you miss these two, you shouldn't be doubling down here. But if you miss these two and you double down here, well, just be patient, because that's what you didn't do the first time, was be patient to some degree and just make an educated bet. But I suggested, gave you that opportunity, or rather the tech team gave me the opportunity to share something with you that might be valuable, and you can decide what you want to do with it on your own course of events, because this is not financial advice, ladies and gentlemen. Must be very clear about that, says the legal team. Although legal team doesn't really like law, so keep that in mind. Just trying to stay safe, ladies and gentlemen. Nice to see a quick little rally here for Avalanche, but I'm not thinking about it yet. Although our private newsletter is going to have something kind of fun that Blue and I went over come out in the next few days too. And for those of you that are listening, the disease and the early sickness of the new investor comes from lack of education and over-emotional trading. And the best way to cure that is to create a healthy environment by going through the learning process. And what a better way to do it than, if you find yourself to be adventurous and like trying new things, to join the private group at arcanebear.com/private. There's like over 800 private members working and growing together. I always love building the content in there with everyone and producing more and more in-depth work. We're going to hopefully be hiring another analyst to go over more macro stuff, what's going on in the monetary supply and some of the things that we just can't cover, because it's better to keep your blinders on and focus, like seriously focus, like get in there, focus. Anyways, it's another story, but we're going to hopefully bring on some other analysts to help broaden the perspective, so we do have that clear bird's eye view for many, many different areas. Yes, M-Stable was another one we were looking at. Yeah, fell right out of the trading range. That didn't take long. Pretty much pulled back all the way to the previous breakout. I would see this as an SOS effectively. It came much lower and deeper than I thought it would. This area of $3 I thought was pretty sweet, but I think what we go over I think what Baloo brought up with me today is a really good idea. Here's our primary trading range. As you can see, I'm sure you'll have gotten good at this. Here's your SOS, a higher LPS, SOS, LPS, and then we had a big breakdown and continued all the way back down. So this to me looks like a primary SOS now, and here's your backup phase taking place. So I was a little early with taking my positions in M-Stable, but I was actually a little late because Tech Team told me about it way back here. My bad, Tech Team. I'll try to remember to write everything down and share it with everyone as quickly as possible, because you guys are awesome, and I love all your hard work, and I'm just only one man. So we're working to bring on more women and men to help do everything. Anyways, next thing. What do I want to finalize? Oh, yeah, I want to finalize with Tesla here to kind of finish off today's stream, just because I think, well, first off, I like Tesla, and I think it represents innovative technology in the general market sentiments, which is important because that's basically what crypto is to one degree or another. It is also disruptive technology and disruptive in multiple fields. Elon Musk has found a good course of action to do so. Nice bounce right off the bottom of the trading range here for Tesla. Because of the similarities and where we are in so many of these trading ranges right now, I am leaning hyper bullish, especially because when we look at the S&P 500 right now, not only did it not break down, you could literally just be seeing the formation of a new trading range, and I maybe even have the primary shakeout here too low. This could be the new primary trading range for the S&P 500, and if it goes tight, and if it starts to break above 399, this thing could run. And that conversation around inflation and deflation is extremely important. Yeah, so keep that in mind. Anyways, stay with the Arcane Bear. I hope you guys had yourselves a wonderful day. Remember to give us a thumbs up. The next part of this episode is where I go over community chats. So if you've made it this far, it becomes much more random. If you thought we were random up to this point, you just wait. It's about to get more random. So we're going to take a look at the community chat of what I should do is I should put Bitcoin open on like the 1 minute so people just freak out watching the indicators move. Here we go. This is how you do it as a YouTuber, right? Am I doing it correct? Am I doing it right now, guys? Put it to the 1 minute and watch that price move. Okay, yeah, Bitcoin's at 48,000. No, it's not looking good. Here we see, look, clear, smaller 1 minute trading range. Looks like we could be seeing a spring, but if we can't get back above 49,000, we're definitely coming down to 47,000. Okay, questions and answer time. Let's take a look at your guys' thoughts. N13 Soul says, Tio, do you have a list of indicator using the most, and what are the settings? I suggest you use no indicators and you learn how to chart the trading ranges like we go over every day, because indicators will mostly cause you confusion unless you are already good at trading ranges. So start with what works and go over that next. Yeah. Kissing women signals less volatility in the VIX. That's true. I have a new TO indicator. If things are going well, we can assume the VIX is going down. Sergio says one of the biggest wallets of Chainlink was selling all this last month. Well, great for them. Take some profits, ladies and gentlemen. Darcy, and Avalanche is the least worrying project the least worrying project. Third spot in the top 10, highest number of developers. I'm really excited about Avalanche. Like, don't worry. Like, I'm not worried about it at all. I actually think it has a clear potential leader advantage. It is well, I don't want to talk too much because I'm not a fucking tech guy, but it's good tech. That's all I know. Tech team says it's good stuff, guys. Okay. Peter Joseph says not going over third biggest coin ADA. Yeah, I go over what I'm just kind of random. I just randomly didn't do it this time because so no, I guess not because I didn't. Loop Creators, didn't you want to discuss something else that you mentioned in the beginning? I did. I vaguely went over it in some of the breakdown. I could try to do more in-depth pieces. First off, I think if you follow those Twitter, that new Twitter feed I made, Michael Burry's post recently about inflation. It's back down here a little bit. Anyways, follow. A lot of these other people's conversations are really where I'm getting data. I don't have the capability as a single individual to gather all the data. So what I try to do is gather a list of people that are good at gathering specific lists of data, and then I support them. Michael J. Burry, Kathy Wood of ARK Invest. This woman, absolutely brilliant. She is the only person who I listen to about market sentiments, pretty much. Although I have been reading Michael Burry's stuff. I've been reading the Citibank stuff that Kush sent over. So I'm reading, but in terms of who I like, Kathy Wood is a gangster. Jeez. Support this woman because she's awesome. So a lot of the times I'm gathering data from very few people. So both Michael J. Burry and Kathy Wood, Kathy Wood for quite some time, but Michael J. Burry's last 3 to 4 weeks of tweet storms are pretty valuable. I would definitely check that out. That's the short nature of that story. Nachikita says, congrats on helping out that family. That was refreshing to see a crypto YouTube do something meaningful and helpful. Yeah, I'm hoping that everyone catches on and just becomes the normal. That's really my goal. Part of me secretly had hoped we'd get famous for it, but I don't care. As long as it catches on and everyone else starts doing it, I'll be a happy man. I'm stoked. We should all be using our marketing budgets to help other people instead of spending it on YouTube advertisements and getting in front of other people's shit. There's just who cares? Do something useful with your money. Useless. Okay. Alexandra Petrov says, hello, Tio. Can you please have a look at Omisego? I can't right now. I only want to just kind of talk. I don't want to look at charts for this last part. Keto says, would you suggest selling when we get to 100 or 1,000? Great time for a story. Lots of people do the wrong things because they think too much. I do things that make me think less. So for instance, when I go order food, I generally order the same thing, and I like to go to the same restaurants so that when I'm eating, I can just kind of do my thing and enjoy my food. In terms of I'm going to sell at a particular price. Once we get above 100 grand, I'm definitely going to be shaving off profits, but I'm not going to be I'm going to sell half my Bitcoin a day. I'm going to try to reback all of it back on 3 months from now because of the lower. No, I just don't try to think that much. It's extraordinarily difficult to be good at it. And I don't need to be good at that. I just need to do more, and often doing more means a smaller percentage of things more frequently. Anyways, you're not going to learn how to play the drums in one day because you played 24 hours that day. It's probably not even healthy or smart, and you'll probably be less good than had you had a good sleep one day, played for 4 hours, thought about it for 2 hours, and then did the same thing the next day. Anyways, it's all about smaller gains over time. I think that's a much more effective way to look at things. Whatever. Sometimes you get lucky. Basta Bahil says, Tio, please everybody ranting about ADA, and I noticed you don't care too much about it. Do you feel that is because too much retail is in Cardano? No, I look, after my conversation with Charles Hoskinson, I definitely bought some Cardano, but in terms of the tech, it's not better than Avalanche. And if you're looking to who's going to be the clear leader of that, well, I don't know. It's a tricky one. People recognize everything because of a price. That everyone's talking about Cardano because the price has gone up and it stayed stronger. It doesn't necessarily mean anything. Now, it is showing that there is strength there. So, yay. But We're in a venture capital sector here. Any number of these could fail. So I'm definitely not staked in one particular area over the other. What's my favorite breakfast to eat? That's kind of a fun question. I normally don't eat breakfast. So nothing. I love pineapple smoothies though. And I love banana smoothies with like multiple mushrooms in it. Okay, so no name says, hello, Tio. Let's say hypothetically the bull market has come to an end and 58,000 was our top. What would your current plan be? I wouldn't rush to make that decision, even if I thought it was. I would wait for confirmations and automatic rallies on larger time frames. If you look back at 2017, even though you're risking not calling the top, and which is also why I suggest shaving off profit in small percent anywhere where you have it, especially if your initial was very small, like then you can't in your mind have ever lost. Like let's say you put in $3,000 of Bitcoin when it was at $6,000 and now it's up, and you take out that $3,000 and Bitcoin comes back to zero. You didn't lose anything. So I think that's a much smarter play, especially because we can assume that most of us are young enough to continue to accumulate for the rest of your lives. More importantly, let's look at it from a trading range perspective. Let's say we started to break down. We saw a UTAD, we hit up to 62, we couldn't come back down. We see a break below, drop down to 34,000 and then a run back up to 44. I wouldn't necessarily think that means the bull market is over. I would actually at that point contend that we might be seeing a new trading range form in a higher range before going much higher. And I wouldn't rush to make that assumption. And so I would be less likely to just try to close out big chunks of a position to protect it effectively. Because even if we did, let's say we did break down, we come into a lower trading range, $26,000. That could just be a move to a much bigger space later on down the line. So I wouldn't want to miss that to try to capitalize on this, which is basically a small percentage in comparison to the 4 or 5x that I think that might come out around the corner. So I would probably do very little to protect at that point, aside from maybe some options, but most of you cannot use in the United States unless the CME futures has those, and I don't think they offer them yet, maybe closer to the end of the year. Anyways, long story short, probably wouldn't do a whole lot. I would shave. If I started to see clear ranges, I would maybe close a few percent, but that's about it. And again, because I mean, all of our entries were pretty much around $9,000 to $12,000, and a few back around $6,000, and Bitcoin are already owned. I have taken a few more buys all up along this way. It's now just a part of the Arcane Bear Treasury program to buy VenCap plays. Because why would I want to sit on capital when we can make investments into crazy, outlandishly fun things like Avalanche? It just makes sense from a company perspective, and like the tax potential there is extremely advantageous for write-offs in terms of a company treasury. Anyways, that's a difficult question because it depends how you're looking at the growth of a portfolio, I guess. But more importantly for me, I would, even if we start to see a close here, I would actually suspect that we're just going to see a thinner trading range. Now, could we come back down and invalidate this totally? Could this be the end of the bull market? Yeah, sure. But even if it was, I'm not sure I would close out the majority of the position here just to try to capitalize, unless we started to see big closes like, below 37, 38, and couldn't get back above that specifically, because then we could easily fall back down to like 13,000. Like you could contend maybe, as we've seen in the past, previous returns of big trading ranges all the way back down to the bottom, where again let's look at MTA, for instance, right? With MTA, first off, this is a much shorter trading range, so it's very unlikely that you can compare the two as an analog. It would be stupid to do so, in my opinion. But here, let's assume, just for shits and giggles, that this was your spring, this was your phase C, and this was your break up to like 50,000, and you saw this big bang, 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 and this return basically back to the top of the trading range for Bitcoin, which would be around $16,000-ish to $12,000. That's a potential. And if you measure that from a loss today, it'd be around 60%. I would shave, if I started to see clear closes below the trading range here, I would shave off a few percent, but not that much, because I could very easily imagine that this would just be the SOS that we had been looking for, way bigger than I had thought before we saw a reaccumulation and then a potentially much bigger move. So I would be hesitant to try to close big chunks of my position. Well, you should just never really be doing big chunks of anything. Again, I think the analogy of like, I'm going to try to buy all the Bitcoin right today. It's like, what if you just like go about your merry way? You know, and a lot of people get this wrong. Dollar cost averaging is not when you buy at different prices, trying to buy lower in the dips. That's not what dollar cost averaging means at all. Dollar cost averaging means, say you have $100,000 in a year that you want to invest, and every month you're going to spend around $7,000 to $8,000 per month to get into the market over that year. That's what dollar cost averaging means. Most of you think, oh, I'm just going to buy Bitcoin when I can. And that's not dollar cost averaging. That's called buying Bitcoin when you can. There's no theoretical term for what that's called, because that amount probably drastically fucking varies depending on who you are, what businesses you own, and the FOMO that you're currently going through. Because most of you that are talking about dollar cost averaging did not enter back here at $6,000, $7,000, $8,000, $9,000, $10,000, $11,000, $12,000. You weren't even fucking in the markets yet. Why the hell would you use a terminology like dollar cost averaging when you clearly don't know what you're doing? Side point, no, dollar cost averaging is when you have a set amount and you average that set amount in over a month-to-month basis versus just firing it all today. And we've gone over some other theoretical papers about what we think is the best, which is Ashley Action's version. And I do think what you're kind of stumbling into is an Ashley Action version of real life. You know, everyone's like, oh, buy the dips. Look, see, you buy a dip, it goes up. You buy the dip, it goes up. You buy the dip, it goes up. Yeah, that's true today. But when you buy the dip and it starts going down, and it doesn't go back up for 2 to 3 years, it's how do you dollar cost average? Well, then you keep buying when you can. And again, unless you have a set amount, that's not actually dollar cost averaging. That's Ashley actioning effectively, right? Again, dollar cost averaging is specifically when you have X amount of dollars. You can study this on Schwab, Fidelity, Citibank, any number of places. It's a pretty easy terminology. R. Rafterman says, Arcane Bear, do you accept super chats for your causes to help families? So here's the thing I never want to get into until we have a clear avenue for it is, did you spend my money on helping the people versus did I spend it on hiring a beautiful model or something to go help us? Our marketing budgets are whatever the fuck we want to do with them. So in terms of you guys giving donations, until we have a 501(c) set up with clear ways to move money through, and for like, here's an area where you can quote unquote donate to the other people we're helping with our marketing budgets. I don't want to mix that stuff. If you feel like giving us a super chat, I do. And I have been actually going over to Kiva and making those as loans. So if you haven't yet, and actually maybe we'll even do this right now because we are near the end of the episode, check out arcanebear.com/Kiva and join our Kiva team. In the last 2 months, we as a group have made over $7,800 in loans to underbanked, underserved entrepreneurs around the world. And some of that has come from super chats because I've made it a personal commitment to put those in there, but it's not exact. It's just close. Like, I don't have time to calculate. You guys gave me $8.53 in super chats. Like, what the kind of nonsense? I don't have time for that kind of shit, guys. Like, I really don't. Do more, think less is my motherfucking motto. So part of the problem is I never want to be held accountable for, did you give me just $6 go to buying more concrete or some shit? Very, very hesitant of that. Again, if we can open a 501(c). So anyways, that's a longer conversation, I guess, but I try to answer that as best as possible there in the short time that I have. And what we're going to do is we're going to find another person to make a loan to. I've got $500 here in the Kiva account from Eric previously. We always love making loans to Guatemala because we've been there. So it already has been funded. Let's take a look here. Someone in Ecuador. Oh, yeah, we always like Ecuador. And she's a farmer, too. This is great. Let's see here. Ooh, field risk partner rating. I'm not a big fan of no stars. Does not inspire confidence. Although I do not really care if the money gets paid back. you actually have the option to kind of vetting the field partner risk, which is how likely will you get paid back based off of the field partner's ability to do so. Wow, a lot of these women are already funded just since I clicked it. This is great. Tajikistan already funded. Carmel, Guadalupe. Oh, she only needs $50. Let's get in there quickly. No stars. What's going on? Kiva, are you broken? So anyways, this is a place where you can make loans to underbanked, underserved entrepreneurs, and they pay you back. I just usually try to look for more stars, but maybe it's not working today. Dang, all these women are getting funded within minutes. Like I can't even scroll down the page. Boom, funded. Let's see here. There we go, 2.5 stars. I usually like 3 to 4. Come on, guys, come on. Can you search by stars? Set order. Ending soon. Location. Sectors. Attributes. Loan details. Partner risk rating. Ah, there we go. Okay, okay. Sweet. That makes that easier. I could save some time. Okay. Oh, wait. Here we go. There we go. So here we have Luz Maria. Very happy to be able to count the support of a bank that believes in her agricultural work and supports her in paying expenses, allows her to go ahead and scale up. She is a responsible partner. She wants a loan to continue investing in her crop. She needs to pay for agricultural inputs, wages for optimal care for her pea crop. She hopes it will yield a good harvest so in order to have seeds for both selling and continue to sowing. Beautiful. $525. Let's go. We only got $500 in there, so we'll have to go a little bit less so that I can cover the donation to Kiva as well. We go lend now, proceed to checkout, and just like that, Luz Maria is a little bit. Sorry, Kiva. I'm gonna give you a little bit less today. Let's give you $10 as a donation to Kiva for the great work they do, and the $400 goes direct to Luz Maria in Ecuador to help with her agricultural passions and pursuits. Okay, I'm gonna have to apparently sign in again. It always does that. Kiva, you are obviously not a tech platform, but we love you for that anyways. And let's see here. Bang. Okay, just like that. Congratulations. We've made the Arcane Bear family has made another loan to an underbanked and underserved entrepreneur, helping do good in the world when we are doing well. It just makes sense. Thank you guys all for joining us today. This is Tia with the Arcane Bear. Remember to check out Kiva. Support your local entrepreneurs. And give someone a hug and a kiss today. We'll see you guys on the other side. Boom.